Welcome to Mastering the Attention Economy podcast. I'm your host, Ari Lewis. Human attention is a scarce resource that millions of companies across the globe are fighting for. Once a week, I interview entrepreneurs, executives, and industry leaders on how they earn attention for their brands using social, content, and media. Today's guest is Max Rofagha. Max is the founder of Finimize, the world's best finance community. If you enjoy the podcast, consider signing up for my paid community for founders, marketers, and brand builders. Visit brandstreet.co, use the coupon code ARI for 25% off a monthly or yearly subscription. I hope you enjoy.
Yeah, thanks for having me, and really excited about the conversation that we're about to have.
So I wanted to start off with, you had already a distinguished career and you're building this amazing community, but I want to start off with your birth. So you grew up in Berlin, and maybe not many of our readers, or my fault, not many of our listeners know this, but Berlin and up until the late 80s was broken up into four sectors, and you lived in the American sector, so you had a fairly American upbringing. Can you talk about how that has sort of helped influence your career and growing up as essentially an American, even though you were in Germany?
Yeah, so I grew up in what used to be the American sector in Berlin, and that's where I learned English. And I went to a German American school there, and we had school buses that were operated by the American Army, and so we would have like a GI at the front of the bus and stuff like that in the early 90s when I was just entering elementary school. Um, and that was a really unique experience, and I think then throughout my entire school career or school journey, I obviously was exposed to um, English as in British, but also primarily obviously American culture and people, and had a lot of friends there. And I think what that did is it really opened that whole world for me. And as a result, I ended up studying in the US and in the UK. I spent a lot of time in the US. I have a lot of friends from there, and I think specifically now when I look at Finimize, I think I've been building a very sort of Anglo-Saxon kind of business where it's really mission driven. Really focuses on brand building, on all these soft factors, which I think is a very American way of building businesses, as opposed to perhaps a classic German startup, which I think is much more focused on really being amazing at transactional businesses or really being amazing at paid marketing. I think we take that much more sort of mission driven brand building approach to the way we build. And so I think that's sort of in a weird kind of way how the circle closes for me.
Yeah, and I think that's sort of a good transition into, you launched Finimize in 2016, and it started off as a newsletter, and the goal was to just educate folks on finance. How did you come up with sort of realizing that there was an opportunity here? Because if you think about sort of the sector you're in, and you told people about what you were doing probably before you actually started executing on it, they're like, oh, this is so crowded, right? You have Reddit out there, you have all these professional tools out there. There is a lot to learn about, public markets, and you still realize that there was an opportunity. And to your guys' credit, you've really, crushed it and executed on it. But how did you think about differentiating yourself in the beginning and realizing that there was that opportunity to be different than what was already out there?
That's a good question. I think for us, the whole reason I think why we are a mission-driven company is because I started Finimize out of a personal experience that I had. And so what happened was I was saving up money every month by taking money from my salary onto and putting it onto a savings account. And I did this for multiple months. And I woke up one day and I realized fantastic news was that I built up some savings, which was great. But the follow-up question was, what do I do with those savings? And my first step was I went to go see a financial advisor. The problem was that the moment I walked through the door of the financial advisor, I noticed that they'd laid out the brochures onto the table, and I noticed that each brochure had their logo on it. And so for me, it became apparent very quickly that this was going to be a sales pitch for their own products rather than them genuinely wanting to help me. And I knew straight away that wasn't the right solution for me. And so I went back home and I started to uh, inform and educate myself as much as I could online. And as you said, there are a lot of resources out there, but the reality was I found it's a very, very convoluted space, and I found it really, really difficult to wrap my head around things, even though I'd studied economics and I wasn't a complete layman. And what then happened was that I would meet friends in the evenings, and a lot of them were finance professionals, and I would bombard them with all the questions that I had from my self education throughout the day. And at the same time, I kept bumping into people who were in the same position as I was. So they were lacking the really deep finance knowledge, but what they didn't have is that community around them of people like I had who could help empower them to make the right financial and investment decisions. And so that for us was, or for me, was the genesis moment of Finimize. And I started to dive a bit deeper, and I found out that 86% of people in this millennial age bracket where we both are in um, save each month like I was, but they were keeping half of their savings in cash because, as I experienced myself, there wasn't a suitable way to get that financial information that you needed. And that's really what was the starting point for Finimize. So hopefully that answers your question.
No, that really does a good job of answering it. One of the things that I would love as a follow up question to that is, obviously, when you started, the newsletter scene, and it wasn't as maybe saturated as it was now, but but nonetheless, I think about finance, and it's a very sensitive topic, especially because, like, if you look at some of these daily newsletters, it's not as sensitive in the sense of, like, people's monetary decisions aren't being put on the line. How did you guys make sure that folks trusted you to be someone where, hey, you can read our newsletter and, like, trust what we're saying, and because I think that's such an important factor, especially in the category that you guys are in.
Yeah, I totally agree. I think, as you say, I think there's a plethora of business newsletters out there, and I think the responsibilities of such outlets are perhaps less than ours, where we do really do a deep dive into people's financial lives. And the reason why people trust us is because we, from day one, have put a really, really big emphasis on the quality of our content. And so, one of the things that I think we've done differently to any other content outlet out there in this space is we haven't hired journalists. We've actually hired ex-bankers, ex-analysts. So the people who write the content have at least five, most of them have at least 10 years of industry expertise. So we recently hired a lady who was a private wealth manager at Goldman Sachs for 5 years and then became an equity research analyst at Goldman Sachs for another 5 years. So 10 years in total at one of the most prestigious banks out there. Our VP of content also comes from Goldman Sachs. We have other analysts from Fidelity, from Schroders, etc. So these are people who have really, really deep expertise in this space, in this domain, and that's for us has been super crucial from day one to set the bar really, really high. And I think as a result, people really trust in the content that we put out. And I think what's important to highlight here is we never ever give any recommendations or advice. What we want to do is we want to give our audience all the information and sort of highlight all the different angles that there are so that they can go and make an informed decision. What we will do and this is a sort of a more recent content format that's been receiving really, really positive feedback is we're now allowing our analysts to share their views that are informed by certain trends or data patterns that they've found. But they will never say, "Hey, you should sell or buy this." They will just try and help you spot interesting investment opportunities and trends through the content that they put out every single day.
So one of the things that I really like about what you said there, but also if you go on your website and did some research for this interview, is that you're really specific in what you're offering and in your product offerings. And I guess my question, as it relates to that, is do you think that is helpful for the business in the long run, in the sense that what we're seeing now is there's some competitors, or maybe you don't consider them competitors, more complementary. And we talked about this beforehand, but companies like Public or Common Stock, where in addition to being sort of this community for talking about public equities, you can actually trade on the platforms. How do you think about as what we'll call, and for lack of a better word, I saw this word yesterday and I'm going to start using it, as these social plus network groups, as a hate quoting the Andreessen Horowitz article, but um, do you feel like that you guys need to offer something else? Do you feel like your offerings are good enough? And like how have users responded to these new social plus offerings that we're beginning to see emerge in the finance community?
Yeah, so I think over the last couple of years, there's been a really big surge in investment platforms and investing tools. So obviously, Robinhood is at the forefront of all of this, and I think what you've seen is there's been huge amounts of venture capital money that have flown or have flooded that space, and as a result, there's been a lot of tooling that's come to the market. And I think what we're going to see now is that there's a new generation of investors, and for us, coming back to the very specific offering, we do not target day traders. Like if you want to be a day trader, then we're not the platform for you. We're not going to give you a day trading idea. We want somewhat more, I guess, refined or somewhat more long-term investors who we're catering to. And so I think now what you're going to see with that new generation of investors is they're going to ask for new information platforms. And I think you're starting to see that in the research space. So I don't know the guys, but I've seen their product, like Atom Finance trying to disrupt the Bloomberg terminal. And the way that we think about what we're doing is we're the old ways of getting information. They were all locked up within large institutions and weren't really available to retail investors. And B, the outlets that there are, whether it's financial news outlets or whether it's any kind of sort of Web 1.0 or even Web 2.0 investing or financial information platforms, I think those are not the platforms that this new generation of investors want to use. And we are positioning ourselves to become that platform. So that's really where we see our sweet spot. And any of these other platforms that are out there, we really view, we partner with a lot of them, and we view them as sort of a different piece within the value chain of this whole investment world.
So would you consider like a Reddit, and maybe even more specifically like a subreddit like Wall Street Bets, a competitor of yours? Or do you feel like your competitor slash, like, let's call it the customer journey discovery for someone who's signing up, is actually more of someone who maybe just graduated college and wasn't on any of this and is like looking to make their first investment? How do you think about like that ideal customer, and like what that customer journey looks like specifically on that initial acquisition side?
Yeah, I think the way so it's interesting because we just finished an internal piece, and we talked about this before the recording around really nailing your value proposition and your brand promise. And so we just last quarter spent a lot of time looking at who is our core customer, what is the brand promise that we want to deliver on. For us, what we found out was that the core customer really that we have is what we like to describe as a casual investor. So this is a young professional, so not a student, but someone in their late 20s, early to mid 30s, who has some cash lying around on the side and wants to take a more active role in investing it, for a variety of reasons. So they don't want to just go and put it into a robo advisor, for instance, and it's really for that user, that we've been building the platform. And I think you said a key word here, which is discovery. And so, what we know from our users is that they use us for a lot of discovery and inspiration. And so, when they come to us, versus, for example, a subreddit, one of the things that we do provide is curation, number one. So our analysts curate everything, and so you can really trust that someone who knows what they're talking about is taking a look and is saying, okay, here's what's interesting, and anything that's not interesting is just noise, and I'm going to cut it out. And so that saves you a lot of time, which brings me to the next point, which is this casual investor who's our core customer is very time poor. So they're not happy to spend hours sort of scrolling and browsing through forums. They want to spend maximum 15 minutes per day to really inform themselves and get the lowdown. And so that's another reason why they come to us. And then I think the final reason for us is um, the ultimate product, or the fundamental product that we are selling. We like to think of it as insight. So we do not give you breaking news. We do not give you news summaries. We do not give you stock recommendations. We give you insights. And so in order to have an insight, you need to have someone who truly understands the field, which brings me back to this hiring analyst. And they then give you an interesting angle that you haven't perhaps thought about yourself. So I'll give you one final sort of anecdote there. So we do have also obviously students, but we also do have very sophisticated finance professionals. So one of them is very high up in one of the largest investment banks in the world, and he reads our content, and he says, I read the content not necessarily because I'm not aware of what's going on, but I read it because of the takeaways and the angles that you guys come up with, which I might have not come up with myself, and that's really what's interesting. And so it's really around delivering the insight. That's something that you can't get on Google, or that you can't get on subreddit, etc. Which is not to say that these platforms aren't providing value by any means. It's just we have a very specific value proposition that we are trying to deliver.
So, I think that brings up an interesting point. You talked about unique viewpoints that you guys offer, but you wouldn't consider yourself a publisher. You brand yourselves as sort of a community. What made you go down the path of building a paid community versus, I think we've seen in Morning Brews the obvious example, probably to our listeners, but there's other companies out there like Industry Dive and other newsletter companies that are majority of their revenues coming from advertising, and you decided to sort of pursue a different route. What motivated that decision, and how did you feel that comfortable that the user would end up paying for a membership? Because I would imagine, especially in your industry, that sponsors would pay a lot of money to advertise on a newsletter, and that would be something where you could probably just sustain on advertisement alone.
Mm-hmm. So I think there's a couple of points there. So number one, we also offer advertising. So we don't just do subscription, although subscription for us is kind of one of our core focuses. But if you are an advertiser, and we have a lot of financial brands, from fintechs like Square all the way to brokers like Charles Schwab, who do advertise with us. So that definitely is something that we are doing. But I think for us, the core that we've been really, really focused on has been building out our subscription or our membership. And there's a couple of reasons for that. I think number one is I think obviously building a membership is a much more defensible and in my view also in the long term valuable business than being dependent on external funds via advertisers. And so we like to have a diversified revenue stream. And then I think to come to your community question, to be totally honest, that just happened very organically. Our community became a thing. What happened was we hosted them one day. We said, "Hey, let's go meet our users," and we met them in a bar, and like 50 people showed up, and the entire bar was taken over by Finimizers. And we then did it over and over and over again, and soon we had like two, three, 400 people showing up. And then what happened was people would email us and say, "Hey, can you do this in LA, or can you do this in New York, or can you do this in Sydney?" And we said, "We'd love to do this, but we obviously can't fly around the world hosting meetups, even though it would be an amazing lifestyle." And so we developed a playbook that allowed people to host meetups all over the world. And that then became a huge catalyst for us. We host a meetup pretty much every single day of the week, somewhere around the world. And this is all 100% driven by our community, so by our community hosts, all on a fully voluntary basis. We don't pay them or incentivize them in any kind of way. Brings me back to the mission. They really believe in the mission. And then I think to answer the question of why do we think of ourselves as community business rather than a pure play publisher, I think we have two pillars. One is we have our content, so we want to give people super high quality content that gives them insights, and then we have our community. And the community is the extension of the content. And so what I mean by that is, it's one thing for us to explain to you, hey, that sustainable investing is a really interesting trend. BlackRock just doubled down on this, and this is something you should look at. It's another thing to then speak with other people who perhaps have just started to make their first investments in ESG ETFs or any kind of ESG funds, and to really learn from their experiences, which brings me back to that foundational story that I shared at the beginning. Having that community around you of people who can share their experiences and their know-how with you is super, super valuable, and is definitely one of the core things that our users cherish about what we do. And so the way that we sum it up is, our underlying product thesis is people come for the content and they stay for the community.
That's a really great answer. And sorry in the beginning, by the way, I knew you did advertising. I sort of just meant as a exclusive revenue path rather than part of a bigger revenue strategy. But I think just talking about the community aspect of what you all are doing. On your website, it says now you are all in 40 cities. I don't know if it's even more than that. Um, but how did you guys adjust to COVID for these community meetups? And do you think the virtual? I assume you're doing virtual experiences now. Do you think that is actually helping even further build the community because maybe people who couldn't connect in the past together are now connecting over the internet?
Yeah, 100%. I think so. When COVID hit, um, we were 100% offline meetups, and I think that was really powerful because there's a lot, as you mentioned yourself earlier on, finance really revolves around trust, and there's just so much trust that gets built if you meet someone face to face. And what we found was that having offline meetups was super crucial, was a really crucial starting point to then bringing that conversation online, right? So we do have chat groups, for example, with our premium members, and the most active chat groups are those that have met previously at an offline meetup because they have established that trust. But when COVID hit, we went 100% virtual, and that actually went pretty smoothly, I have to say, in hindsight. And what that's allowed us to do is it's taken away some, not all, of the restrictions of geography. You still have time zones, obviously, but we used to think of our community offering very much in terms of local communities. So, we have a very active community in Australia, we have a very active community in Africa, and all over the world. And the interesting thing was having these hosts pick up the topics that are interesting for the local communities, right? So we obviously don't know what is the most pressing financial topic that people want to find out about in Nigeria or in Sydney. So our hosts would do that. And I think now what we're seeing is that we don't need to create that geographical constraint anymore, because with virtual you can connect way more people. And so we are starting now to really organize everything around topics rather than around geographical locations. And the final point that I'll say there is it's been really exciting because it's allowed us to connect way more people. So last year we collected around about 10 to 15,000 people who had physically met at meetups somewhere around the world. This year, we've already connected 30,000 people, so we've 3x'd it, and that's the really exciting part, is that you're able to just scale it much more efficiently, obviously online.
Do you, trying to think how to word this question. I guess the best way to ask it was, is there ever an aha moment for, a user where they go from, let's say, casual peruser of the app or casual newsletter subscriber to, paying member or joining, one of the communities? Is there something that y'all are doing internally, or is there something that, like, after 30 opens or 10 minutes a day on the app, do you have an aha moment that you're trying to get for that user so they begin to convert into a paid member?
But yeah, so I think the thing that we've realized, and I think there's a lot of the Financial Times has done a lot of research. I think the New York Times, a lot of these very established players have looked into what is a key engagement driver and a pure content play. I'm not even talking about community here. And it typically revolves around frequency and then intensity or depth. And what we find for us, and we've done a lot of research on this now, is frequency is the number one indicator that someone is going to find enough value to get a subscription, or to, once they have a subscription, to actually stick around. And that makes sense, coming back to that core customer that I was talking about earlier. They want to have that bite size, and so we're not optimizing for you to be in the app for 5 hours a day. What we find is more valuable for the user, and therefore more valuable for us, is getting the user back, let's say five days in a row for 10 minutes, rather than one day for 5 hours. So frequency for us is one of the things that we've noticed is a huge value driver. And then the second piece is, we see community as a huge retention driver for us. So once you do have a subscription, we see that if you engage with the community, you're significantly more likely to keep your subscription active, which is all part of that thesis: come for the community, stay for the come for the content, stay for the community.
Great. So as we begin to wrap things up, I like to ask my interviewees one last question, which is, what is one lesson that you would like to instill upon our listeners that you've learned from building Finimize?
Good question. There's perhaps a bit of a recency bias here, but I think really understanding your brand promise. So once you have the mission, which I've mentioned now a couple of times, I think having a mission is absolutely crucial. Once you have the mission, then I think you really need to understand what's the brand promise, what's the promise you're making to your user that you're going to deliver to them, and why they should stick with you rather than a competitor. And really nailing that and being crystal clear, I think is going to catapult you forward massively.
Got it. Awesome. Well, Max, thanks so much for joining. I really appreciate it. For those who want to subscribe to the newsletter, download the app, or if they want to follow you on social media, where can they look?
Yeah, so you can find me personally on Twitter. So my handle is Whole Earth Web, Whole Earth Web, all in one word. Um, and then we have obviously Finimize across Twitter, Instagram, and LinkedIn. And you can sign up to our newsletter on finimize.com for free. Or if you're interested in the app, then you can go to the Apple or Google app stores and download our app, and you get a free 7-day trial and check out the app. And if you like it, then you can upgrade. If you don't like it, you don't pay anything. So bunch of things that you can try out.
Awesome. Well, thanks again for joining us. I'll have the URLs in the show notes for those who are listening or watching on YouTube. But until next time, everyone.
Thank you.
Thanks for listening. If you enjoyed today's episode, consider giving us 5 stars on iTunes. If you're listening to us on YouTube, consider hitting the like button and commenting on what you enjoyed. I'd really appreciate it.